All right, here we are, episode 9. It's been a few days. Hopefully, it's giving you time to watch these other videos. So, today's video, we're going to go ahead and talk about, we're going to go deeper into liquidity because how are you going to make money if you don't know where the market is going? Now, the market moves to liquidity, so we could also call that the draw on liquidity or where the market's headed. Now, as I talked about before, your liquidity is going to be above old highs, old lows, of course, swing highs, swing lows, or your order blocks that we talked about, fair value gaps, and our consolidation areas. All right. Now you see this extreme move up right here. Now let's just forget about that. Now this was today, but let's just push that to the side for a moment. Let's just take a look at this area right here. I'm gonna take the line off first. So what is this right here? Swing high, a swing high, a swing high, and now all of them together, they are relatively equal, right? Because look at this one, and this one. So we have three, what we would call relative equal highs. Just to mark out, the highest one, or really, just to be safe, let's go ahead and mark out, the midpoint, the lowest one. It doesn't really matter, but these highs are relatively equal. It doesn't really matter where you put it, but now we have relative equal highs. Now just think for a moment. There's people that are making money from the market going down, and there's people that are making money from the market going up. And now we'll talk more about stop losses and things like that, but just for now, just think that if you were to go short right here, you would feel very safe with your order up here. Now price gravitates towards these areas to take orders out. Look at this high right here. One moment. I'm gonna have to change this song. I really do not like this song. Let's see what else we got. Looks better. The song was a little bit too hectic, but alright, look at this high right here. Look how the price came up just above. Just barely tapped it. Just tapped it. And then where did it go? It came back down. Now, it did come down into an order block, but just so I don't overload you with information, look at these relative equal highs. So, coming into the next day, and just again, if you don't know, the gray area is before the next day starts. So, in the black, these are the days. This is, the New York session, trading hours. The market is open from 9:30 in the morning, so 4 p.m. regular trading hours. Now it is open before that, of course you can trade, but just focus on that time frame. But look how we have a high right here. These highs here, high here, high here. Look how they're relatively equal. So you can expect price to come above these highs. And what did it do? Price went above the highs. And then what do we have here? More equal highs, consolidation area. All this. Two equal highs right here. Equal highs here. Price came just above it and then dropped back down just slightly. Now, you have liquidity on both sides. But look right here. Look how. And now you might be wondering, well, how do we know it's not going to go down? Why is it going to go up? Well, look here. What is most likely? Equal highs here, equal highs here, equal highs here. We have a low right here, but look, that low got taken. That low got taken. So now you can expect price to be coming up and gravitating towards the other highs. Let's look at another example. Let's look at another example. I'll just go to a random day. I'll just stop. Let's just stop here. Let's just look at a random price section. Let's just look at it right here. Let's look at right here. And let's just go to, let's look at here. So that's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, so we have 5 trading days here. Okay. Forget about this on the left. Forget about this on the right. Let's just focus on these 5 trading days in here. I'll make these red. So we have, what is right here? What are these? Swing high, equal highs. So what would that make this? And I know I said don't focus on this, but just for the example's sake, you know, you do have equal highs here, but look at these equal highs. Price came down. Okay. But it left these equal highs. So now, where will price be going? To those equal highs to take them out. And look, it comes just above them and goes down to where? Look, more liquidity. So we had liquidity below this low. And we had liquidity below this low. They got taken here and here. All right. And now, notice how this low remained intact. We did not take that. And this low did not get taken either. Okay. And I'm going to go deeper into, I really don't know if I want to make a long video. And the only reason I say that is because I know most people are so lazy that they don't want to watch an hour-long video. Which is crazy, but man, oh man. Well, just real quick, I'll just drop a little, just a little nugget of information. So, how do you know that price is gonna take out this low and not go ahead and just take out these highs instead? So for one, we left the low intact. And what do we have here? A fair value gap. Look how price came into the fair value gap. Let's draw a midpoint. So this is the middle of the fair value gap. I'll make that yellow. I'll just say, yeah, that's about the middle. Should be about the middle right there, I guess. So when price does not go above the midpoint, that shows weakness, okay? Price came up. Now don't worry about the wicks. Don't worry about the wicks. Price came up to what? Into a fair value gap. And what is this candle right here? That's the last up close candle before a down move, making that an order block. If you've been following along, you should have known that was an order block. Well, order block. So price came down. This low is still intact. Came up to the order block and the fair value gap. Traded lower. Okay. Came back up, touched the order block again. Displaced lower. Finally took out this high. Okay. I'll show one more example and I'll go deeper into this. But the main thing I just want you to, you don't have to get all this today. The main thing I want you to understand is just that price moves to liquidity. So we have liquidity above highs and up below lows. So we came down, took out this low. Okay. And now we left this low intact. So we came down. Came back into it and came back into what? What is this? Order block. Fair value gap. So price came back into the order block and fair value gap. And then traded lower, taking out the low right here. Okay. Let's extend these over. Actually, we're not gonna extend those over. Alright, this might be a little bit longer video. So prices taking out this low. Now the market is bearish at this point. I'm gonna go over in some other videos on how to know which direction. But let's just take a look. Liquidity here. Taken from this low. And then price comes up to an order block. Look how it stops right at the order block. Look at this order block. Price comes up to the order block, stops, trades back down, takes out the liquidity from this low, trades back up into what? That same order block. What do we have here? Relative equal lows. These lows are about equal. Price comes down, takes that out. Price goes on. But look, remember how we left this intact. And now, when price is going down, we have liquidity left. And that stuff gets taken eventually. And that's where we're at right now. So this is ultimately where price is reaching to. This high, this high. Look here. Like I said, we took out these equal highs. I'll do one more example. I'll go to a daily chart. Crazy times we're in. Crazy times we're in. These last 3 days. For those of you who haven't been trading for a while, this is probably not much significance to you, but for those of you that have been trading for a while, you know this stuff, these amount of moves, is not normal. These are daily candles. For reference, these are how they usually are. That is not normal. That has not happened like that in what? Ever? The history of ever in like what, 50 years? Yeah. Yeah, no, that's quite the quite quite the events going on. What a time we're living in right now. It's probably not a good thing, but well, who knows? Well, and then let's take a look at right here. What is this? Obvious level of liquidity. What is this? Obvious level of liquidity. So price comes down, dips just below that, comes back up, dips just below this low. Look, you can't make this stuff up. Dips. There's liquidity there. Dips barely below that. Comes back up to an order block. Dips below that, and then we take out the liquidity up here. Comes right above it. Back down. Leaves liquidity here. Takes the liquidity. And now we have, what are these? Relative equal highs. Let me take some of this stuff off so it's not confusing. Relative equal highs with this high and this high. The price comes up, takes out the liquidity above that. And now we have liquidity here. Below that. Takes that out. So hopefully that made sense. Go ahead, and your homework is to go into your charts, look for the obvious levels of liquidity, and look and just study it. Just study price. Just look for where price takes out liquidity.